Warm greetings and welcome back to Bulletin Bites, your roundup of the latest developments in law, tax and business across India. As we step into the third quarter of 2025, the Indian economy is showing renowned momentum. In the first quarter of financial year 2025-26, real GDP grew by 7.8% year-on-year, a notable rise from 6.5% in the same period last year. Despite ongoing global trade headwinds and currency fluctuations, India continues to rank among the fastest-growing major economies. On that note, let's revisit the key compliance, regulatory, taxation and policy highlights from Q3 2025 and explore the forces shaping this dynamic economic landscape. Company law and IBC updates. The Companies Amendment Rules 2025 expand fast-track mergers under Section 233 to include certain unlisted and group companies, shift jurisdiction to the regional director, and now covers demergers. On 5th of August 2025, the Supreme Court allowed companies in insolvency to voluntarily surrender leased property with committee of creditors and resolution professional approval. On 26th of September 2025, it ruled that the COC remains functional until a resolution plan is fully implemented or liquidation begins. The Insolvency and Bankruptcy Board of India 5th Amendment Regulations 2025 required RP to disclose and update avoidance transactions in the information memorandum and share them with resolution applicants before assignment. Moving forward to labour, consumer and environmental law updates. Recent updates in labour, consumer and environmental law include the Delhi government permitting 24/7 shop and establishments operations under the Delhi Shops and Establishments Act 1954 and the Supreme Court ruling that co-located business units with separate registrations may be treated as one entity under the Employees Provident Funds and Miscellaneous Provisions Act 1952. The Employee State Insurance Corporation has reintroduced the scheme for promoting registration of employers, allowing voluntary employees' state insurance registration without penalties until 31st of December 2025. The Ministry of Environment, Forest and Climate Change revised the pollution index, exempting white category industries from consent under the Water Prevention and Control of Pollution Act 1974 and the Air Prevention and Control of Pollution Act 1981, subject to State Pollution Control Board notification, and introduced new rules requiring polluters to remediate contaminated sites. The Maharashtra Pollution Court Board extended its auto-renewal consent scheme valid for 5, 10 or 15 years. Finally, the Supreme Court restored consumer forums full powers, equating them with civil courts for issuing interim and final orders. Bureau Indian Standards Update. Effective 1st of October 2025, the Hand Tools Quality Control Order 2025 mandates that all hand tools sold in India must bear the BIS standard mark under a valid BIS license. This requirement applies to both domestic and foreign manufacturers. Non-compliance will attract penalties under the applicable regulatory framework. Recent tribunal rulings are bringing more clarity to TP assessments in India. In Schneider Electric, the Chennai Tribunal held that a certified TCF valuation under Section 50B for a slump sale must be accepted by the TPO and can't be replaced with stamp duty values. In Novator Electric, the Mumbai Tribunal ruled that depreciation on goodwill and non-compete fees are non-operating and should be excluded when calculated operating margins. These decisions promote greater consistency and predictability in TP evaluations. GST 2.0, announced after the 56th GST Council meeting, proposes a two-slab rate structure, Essentials and Standard, aimed at reducing litigation, improving compliance, and easing consumer tax burdens. Simplified registration and refund processes are also part of the reform. On 1st October 2025, the government issued tariff concessions under the India EFTA-TEP agreement for Iceland, Norway and Switzerland. To boost ease of doing business, ICE Gate now offers automatic bank account approvals across customs stations. a time-bound mechanism has replaced the 2018 provisional assessment rules. Additionally, RoDTEP benefits have been extended to DTA exporters and those under EOU, Advance Authorization and SEZ schemes until 31st of March 2026. Withholding tax developments, this quarter witnessed important rulings shaping the interpretation of withholding tax provisions under domestic law. The Mumbai Tribunal reaffirmed that a payer cannot be treated as an assessee in default where the payee has already reported the income in its tax return and paid the applicable taxes, thereby discharging the overall tax liability. In another significant case, the Gujarat High Court addressed the growing use of automation in tax administration. The court criticized the issuance of a high-pitched assessment amounting to INR 6,480 million against a non-existent entity following a merger which resulted from automated system processes, emphasizing that software should be a tool, not a master. The court underscored the need for human oversight and reasoned application of law in tax assessments. In today's fast-paced business environment, financial agility is no longer optional, it's essential. One emerging approach that's gaining traction is the free a quarter strategy, designated to unlock profitability by rethinking how income and expenses are structured. The model focuses on concentrating income generation within a designated quarter while evenly distributing expenses across the year. So this creates a full quarter dedicated to pure profit, offering sharper financial visibility and easing operational pressure. Then, when paired with strategic outsourcing through business process outsourcing partnerships, the impact multiplies. By shifting non-core functions to specialized providers, companies can reduce fixed costs, increase flexibility, and sharpen performance targets. Together, these moves transform free a quarter from a tactical framework into a sustainable growth engine, one that aligns financial discipline with long-term strategic advantage. With that, we wrap up this edition of Bulletin Bites. For deeper insights and detailed analysis, we invite you to explore our full newsletter or reach out to us directly. If you found this update informative, do like and share it with your colleagues and peers. Until next time, stay tuned, stay safe, and stay informed.